The Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, ladies and gentlemen. Welcome back. This is The Blockchain Show, episode number 152. I've got a special guest here today from the world of taxes, David Kemmerer, the CEO and co-founder of CryptoTrader.Tax.
There it is. Yep.
Welcome to the Blockchain Show. How are you doing?
I'm doing good. It's busy here because, when we're recording this, it's February. So in the midst of tax season, so our busy time here. But other than that, I'm very good.
This is like we were just saying before we started recording, this is the first for us. We always kind of like hint at taxes where it's kind of like the elephant in the room that we're afraid to talk about because we just don't know. I'm really excited to talk to you today because there's just so much that we've neglected. So yeah, I just want to give you the floor and maybe tell us a little bit about how you got involved with this world and what you're doing.
Yeah, and I'd say you neglect it for good reason, like most people, right? It's not a fun topic. It's not sexy. It's not, changing the world, right? It's really what we're focused on is just exactly like you said, providing clarity, providing straightforward guidance and help for the folks who do want to, stay compliant from a tax perspective when they're investing and trading in cryptocurrencies. So yeah, not surprised that you haven't covered it actually, just because it's not the most exciting thing, but it's necessary. So my background, have been an entrepreneur for a while. So just under 3 years ago now, kind of in early 2017, I was actually trading cryptocurrencies with two of my partners. And we kind of got in on the whole hype and were one of the many in that crowd in 2017. But we were writing automated trading strategies to essentially provide market making to these exchanges. So it's high volume trading, just trying to trade these spreads and make money off these cryptocurrencies that didn't have much liquidity on these exchanges at the time. Anyways, in doing that, we came across what we dubbed the cryptocurrency tax problem, right? Which is when you're trading and investing in these cryptocurrencies, you're triggering taxable events that need to be reported on your tax return, right? So from a capital gains and capital losses perspective, very similar to the world of stocks and equities, if folks are familiar there, the same tax reporting rules apply. So when we were doing this market making, we had this huge problem, couldn't do it ourselves. And so we decided to essentially start a company to automate it.
That's great. I mean, I would imagine there'd have to be automation at some level, but I'm curious to learn more about how all that works. Just to go back a little bit, last year was the first year I think it was on TurboTax. Intuit, they had a little section about cryptocurrencies. And I was like, oh, okay, it's coming. What kind of people are going to need to use this service?
It's anytime you trigger a taxable event. And so we can cover that quickly. So a taxable event is just a fancy way of saying anytime you're incurring a capital gain or a capital loss. And so let's compare it really quick to the world of stocks, because I think for a lot of folks are at least familiar in some form of how investing in stocks work, right? I might buy Apple stock for $100, okay? And then let's say 6 months later, that investment has appreciated to $150 and I sell that stock. Well, now I have a $50 capital gain, and that capital gain I report on my tax return, and then I'm done with it, right? And I pay some percentage of tax on that gain because it's a form of income, okay? Now, that's traditionally very easy with the world of stocks, because if you're going through some type of broker like an E-Trade, they're going to give you a tax form at the end of the year that details all of this. And then typically, right, you hand those to your accountant or you plug them into TurboTax like you were mentioning. And so it's fairly straightforward. But in the world of cryptocurrency, the same rules apply, right? If I invest $100 in Bitcoin and 6 months later I sell it for $200, let's say, well, I have a $100 capital gain that gets reported in the same fashion on my tax return. And I, pay X percentage of tax on that. So getting back to the taxable event, right? The taxable event is when I sold my Bitcoin or disposed of it, anytime I got rid of it. And then that's when I'm realizing the gain or loss. And it is a misnomer that, if I have X percentage of under some threshold of gain that I don't need to report, or if I have only losses, I don't need to report, which is actually not true. And I do just want to clarify that. So like anytime you incur a taxable event, which is just you disposing of crypto, that is triggering a reporting requirement. So not sure if that clears things up for you, Ethan, but at a high level, that's how it all works.
Yeah, that's good. Good to know. Don't want the IRS coming after anybody.
Exactly.
So you mentioned automation. Walk me through the process of how you design this program and how somebody is going to input their data.
Yep. Yeah. A good question. So from the get-go, right, the whole design methodology, if you want to call it that we used just to make things as simple, as intuitive, and as easy as possible, just because we want to abstract a lot of the complexities around even what we just talked about a minute ago away from the user, so they don't have to think about anything. So the process is pretty easy. If someone lands on our website, right, it's an online application similar to TurboTax. They're just going to create an account for free. They'll log in, sign up, and then they'll be prompted through a 5-step process. The first step is they're simply going to select their various cryptocurrency exchanges and platforms that they've used throughout their time investing in crypto, let's say. So let's say I've used like Coinbase and Binance, so I would just select those. Then I'm going to use the application to just automatically suck in all of my trade history from those places, right? So from Binance and Coinbase in our example, I can just click a button and import that data into CryptoTrader.Tax, or I can also just upload the history file that Coinbase gives to their users. And so all of this we've built integrations with, so it's just a click of the button and you'll be able to import all of your historical data. So once that data is in, you'll simply generate your capital gains and capital losses reports with the click of a button. That's all based on that data that you imported. And once you've generated your reports, you can take those to your tax professional or plug them right into TurboTax. So it's pretty easy, right? It's just sign up, import your trades from your exchanges, generate your tax reports.
I like that. Actually, I was wondering if you noticed a difference in how the IRS is kind of dealing with this crypto trading kind of landscape. Have you noticed a change in the last couple of years, or is it still in the evolving stages?
Well, both. So it's changed a lot, right? So when we first got involved in the space, it was still very off the radar. The IRS had taken its stance in 2014 about how it's going to classify cryptocurrencies, which is as property for tax purposes, which is the exact same way, like I said, that stocks are treated, right? Stocks are a form of property. Same with cryptocurrency. And that just means you're incurring capital gain, capital losses. And so back in 2017, when we first got in and started building the company out, like you said, the IRS was not paying attention to it. People were still reporting, but it was not a hot button topic. Now, fast forward about 2.5 years to today. Now the IRS has, this past summer, they sent out over 10,000 warning and action letters to various folks here in the US. They released a whole new set of guidance on cryptocurrency, and a lot has happened. And they've kind of put their flag in the ground saying, hey, this is one of the most important areas of tax enforcement that we are going to go with this year. And so it has changed a lot in that sense.
It's really, I don't know, relieving, I guess is the word, to know that there's companies out there like you that are working to make this more easy and functional. Yeah, thank you for answering that question. It's kind of interesting to see where the landscape is going.
Totally. And it's just starting to, right? But I don't see that as a bad thing, like you said, right? It's the IRS is really legitimizing this asset class by, putting forth this new guidance, adding it to the new 1040 Schedule 1, which is requiring every U.S. taxpayer to answer yes or no whether they invested or transacted with virtual currencies like Bitcoin. And for mainstream adoption, right, if you will, to occur, the rules and regulations have to be clear. And so from that standpoint, that the IRS is, at least working to provide clarity that allows more retail, more mainstream investors to feel comfortable in the asset class. And so that's a good thing. While it's still annoying, no one likes paying taxes. I definitely don't. The more clear, the more legitimate this asset class becomes, the better the space and the better the industry is going to do as a whole. So it is a net positive thing. Some folks don't see it that way, but we definitely do.
Yeah, I appreciate that outlook. That's super interesting. The 1040 Schedule 1 question. I imagine there's going to be a lot of folks that have never really come across that, and it's going to kind of pique their interest.
Right, exactly.
What do you think about the term virtual currency?
Yeah, I mean, clearly they're just trying to not box themselves in, right, in a very IRS fashion. They want to be as almost ambiguous as possible so that, something that folks don't call a cryptocurrency doesn't apply to that. That's the point of that, right? They're just trying to be as all encompassing as possible. So then, the arguments against, hey, what does that actually mean, are going to get worked out in the courts. But it's their goal is just to kind of make that an all encompassing piece of, wording.
Yeah. How are you guys getting yourselves out there? Are you partnering with any exchanges or any other kind of existing tax services?
Mm-hmm. Yeah, really good question. So we do partner up with leading cryptocurrency exchanges because, like I hinted at before, cryptocurrency exchanges themselves have a huge challenge when it comes to giving their users a tax report at the end of the year. Similar to how I mentioned with a typical stockbroker, right? An E-Trade or a Charles Schwab or Robinhood, for example, they'll give you a 1099 at the end of the year, and a very specific 1099 that details all of your gains and losses that you've incurred from your investing activities. Because of how cryptocurrency works, right? And the fact that it's transferable and folks are sending it from wallet address to wallet address, essentially the exchanges, because I can send my Bitcoin into my Coinbase wallet from wherever, they actually don't have the ability to track what's called your cost basis, which is just a fancy way of saying how much you originally purchased, let's say, that Bitcoin for. Say I purchase X amount of Bitcoin for $1,000, and 3 months later I send it into my Coinbase wallet to sell it. Well, Coinbase can't know that I originally purchased it for $1,000. So it can't possibly give me a report at the end of the year saying, hey, David, you gained $300 from that Coinbase sale, right? And so that's the reason why platforms like us exist, is to accurately build these reports. You actually need to pull in your data from all of these different places, from your exchanges, from anywhere you're doing staking, mining, right? And pull it into a centralized platform or just one unit of record. And then and only then can you generate your tax report. So we partner up with exchanges to kind of be that intermediary, right? So partner up with folks like Uphold, GateHub, some other folks. And now their users can use our platform to not only suck in, let's say, their GateHub trade history, but also their trade history from all of their other platforms so that they can generate 89, 49. In addition to that, yeah, we've partnered up with TurboTax. So you hinted at the question that they added to their platform last year, which is, hey, did you ever sell or trade cryptocurrency? So that is a direct integration with our platform. And so we're natively compatible with TurboTax. All of our users can export their cryptocurrency reports right into their TurboTax account for easy filing. Again, hitting on just trying to make this as seamless and easy as possible. And then on top of that, we do a lot of content marketing. So, educating, stuff like this. We have a lot of content on our blog on details of how this stuff works, right? How do I do my taxes? How should I amend previous years? A lot of content marketing. So those are a few of the avenues that we use to get the word out about CryptoTrader.Tax.
Oh, that's great. I just got a huge confidence boost because I was thinking about, I wish I could use TurboTax, but I had no idea that was you guys. So props.
Yeah.
Man.
Yep. So that's us.
Yeah. Cool. I'll definitely actually use that this year. So right on.
Yeah.
I had this question pop up in my head. Historically, the IRS and the FBI would use taxes to kind of bring down criminals, like Al Capone. Do you think that eventually in the future they're going to try to track down crypto people who trade in cryptocurrencies. Is this? Do you think that that's possible, or is the space too kind of pseudo anonymous to really crack down? Because it seems very like kind of voluntary at this point.
Mm-hmm. Yeah, I mean, it is very voluntary, but in the US, right, we have a voluntary tax system, right? I am in charge of accurately reporting my income for the year. But in regards of the pseudo anonymity, however we want to say that, it's kind of a misnomer because to enter the world of cryptocurrency investing, right, most of the times you're going to have to go through a cryptocurrency exchange that requires KYC and AML type documents, right? I have to upload my driver's license or my passport to even open a Coinbase or a Gemini account or really any other main cryptocurrency exchanges. And this is going to become the mandated norm, right? We're already seeing that exchanges that do not require KYC are being forced out. They're leaving countries, and that's going to only accelerate. And so, from a tax perspective, the exchange is kind of, frankly, what rats you out, right? Because the exchange is required to send. Well, I mean, you could debate this, but they do send the IRS what's known as a 1099-K. Now, this is not a document that's helpful for your tax reporting, but it does report to the IRS that, hey, you have a Coinbase account and you've traded this much volume over the year. And so that automatically gets sent out if you have over 200 transactions and over $20,000 of transaction volume on the exchange. And so it's actually not easy, I'll say, but the IRS is very aware of the folks who have these types of accounts because they're getting sent them that information. So I do think, yes, the IRS means business here and they're very serious about it. And I do think we'll start seeing some high profile cases of tax evasion get worked out over the next 5 years.
Yeah, that's going to be interesting to see how that all develops.
Right. And I know it's frustrating, right? Because first of all, cryptocurrency, right? It's born out of this anti-state movement. And so whenever you say the gains in your investments are taxable, right? That leaves a bad taste in a lot of people's mouth. And I get it. It's not like a fun thing, but if it's the law, right, we do want to still build solutions for the folks that want to stay compliant. So, that's what we're in the business of doing. We're not trying to convince people that they need to be doing this, but for the ones who want to be, hey, we're here for them.
And I noticed that you had a professional element to your product. Is that designed more for people who prepare taxes?
Exactly. Yep. So they have a whole different set of problems. The folks who are tax preparers, right? There's millions of these. There's not millions. There's hundreds of thousands of these folks in the U.S. who, their full-time job is helping people file and prepare their taxes. And so, a lot of, as I'm sure you can imagine, a lot of these accountants, CPAs, and tax preparers, they have no knowledge of how cryptocurrency works, what it is, or anything about it. And so, when their clients come to them and be like, yeah, I heard that I have to report my crypto on my taxes. Here's my stuff. Well, these tax preparers have no idea what to do. So we've built a whole set of solutions for those folks as well to make it easy for them to manage all of their clients who perhaps have cryptocurrency investments. And so that whole product is built on our same tax engine that we use for our consumer product, but it's packaged and tied up in a bow to help the tax preparers as well. So that's the different side of our business over on the professional side.
Yeah, that's great. I know a lot of people that could benefit from that. Kind of looking forward into maybe the next. Well, I know you're in the middle of tax season right now, so maybe we should stay here for a second. What are some of the challenges you guys are experiencing this year, and what are you kind of hoping to gain from this year's season to help you next year?
Yeah, it's a good question. Anytime you're operating in such a new, emerging, and quickly changing and growing industry, you're going to have a lot of growing pains. One of the biggest ones for us is that there's no data standardization across these exchanges. So like I said, right, my team every day is building integrations with all these cryptocurrency exchanges. And there is zero standardization between how each exchange reports their trades, how they report things as easy as the ticker symbols of these assets. And so we have to build software that's smart enough to know, for one example, that, this exchange that treats Bitcoin Cash as BCC is the same as this exchange who the ticker symbol is BCH, right? And that's a very simple example. There's much deeper things that go into pulling in this data from an integration standpoint. And that's definitely the biggest challenge, right? Is that there's no standardization. Not one exchange is reporting this stuff in the same fashion. So it makes it difficult for our team to quickly build out these integrations. But that's definitely a big challenge. I'd say that's the biggest. The second one is probably just waiting on the IRS to essentially put their flag in the ground with some other issues that they still haven't completely clarified. That comes around things like cryptocurrency forks, staking rewards, right? All these different nuanced cases that occur within this world. And they haven't officially said, hey, here's how we're going to handle it. And so, we have to have our tax team come in and say, hey, this is the most conservative approach. Let's do this. That's also a challenge. But that's part of building the business. But those are some of the things that, we struggle with on a day-to-day basis.
I see. Yeah. It's really good to get a little bit of insight into what you're dealing with. It's obviously, it's kind of like a complicated space within a complicated space. So hats off to you.
Yeah, exactly. I forget how much I've learned over the past 3 years just diving into this space, right? But as I talk it back to you, I hear how complicated it sounds. But it really isn't too complicated, right? At the end of the day, it's just figuring out a way to report how much you've gained or how much you've lost through your cryptocurrency investing activities, right? That's really what it is.
Thinking about filing traditional taxes, there's usually sections for other taxable sources of income. Other than just your traditional income, they have sections for other forms of income. Are we going to see something similar for initial coin offerings or airdrops or tokenization's kind of a different thing that we're not talking, or that it's not applicable yet?
Semi, right? So if we're going to get into ICO world and tokenization, right, then we're hitting on a topic that actually we don't cover a lot, because now we're getting more into, our cryptocurrency securities and, what do I need to do to compliantly raise money through a security offering? And right, that's not really us, right? We're just tax reporting. It's whether it's a security or not, capital gains and losses still apply. Now, some other things might factor in, but now from the other point of airdrops, token splits, that's what I get back to. The IRS, first of all, I don't think they understand what all this stuff is, and so, of course, if they don't understand it, they haven't blanketly put out any guidance saying, hey, this is how you should handle airdrops from an income reporting perspective, or here's how you should treat, this XYZ thing that happened. Now, so that gets back to the challenges that we face. Now, they did put out a very good, I think it's a 42 question FAQ content piece that's available right now on irs.gov, all about how they're handling virtual currency reporting. And it dives into a lot of this, but the nuance and the specifics don't 100% get answered. So I'm not sure if that answers your question, but yeah, not completely applicable to tax reporting from the security ICO perspective.
Okay, yeah. Thanks for explaining that. I noticed that you guys have a really good blog on your website, kind of showing people how to use these services, how to even use exchanges, and how to make money, clarifying the different types of taxes like you were talking about. What are you most impressed about cryptocurrencies, and how do you think that this is going to kind of change our financial landscape, just to kind of broaden out a little bit?
Sure. Yeah. Well, and thank you for the kudos on the blog. That's, like I said, one of the biggest focuses from a marketing standpoint is just content marketing, right? Educating and answering questions through good blog content. So that's important for us. In terms of kind of the space in general, what I'm really excited about is the folks who are providing like banking like services with cryptocurrencies, right? Where I can keep my cryptocurrencies with, a company like Celsius or BlockFi, and then earn X% interest on those deposits, right? And so if you look at the business model of a bank, right? So they make money. We all deposit our money with Chase or Wells Fargo, and then they go and loan out our assets. They make the money off those loans, and they pay us a very ridiculously small interest rate, if anything, right? And so in crypto, well, first we have to dive into, well, how did that business model evolve? Well, it evolved way back in time when it was actually a threat to be holding, right, wads of cash in my house, right? I actually wanted to bring my cash to the bank so they could safely secure it. Well, now that we live in a world of complete digitization, right, I'm not actually using the bank to securely store my money, right? It's just they have an entry that says David owns, $10,000, and we're crediting in his account, right? It's all digital. And so the breakthrough and what's so exciting about a cryptocurrency is that now we don't necessarily need a bank to securely store these assets, right? We can self-custody our own money, and then we reap the benefits of making interest off it, lending it out, right? And you can get into this peer-to-peer lending space where, some mortgage gets financed by 1,000 different people's cryptocurrency holdings that they hold themselves. So it's completely disrupting the business model of a traditional bank. And I think that's incredibly exciting. I think there's a lot of challenges still that, like we said, infrastructure needs to still get built out in this space, right? Tax tools need to exist. Insurance needs to continue to get built up for people to feel comfortable and confident to, move money into this digital cryptocurrency world and self-custody it or store it with a company like BlockFi or Celsius to earn interest. But I think that's incredibly excited. I frankly don't see how this is not going to play out, because I think the core business model of a bank is outdated. And now that we have technology like blockchain that allows you to self-custody, right, and report on everyone's balances without the need of a third party, that's pretty powerful.
Yeah, that is true. I really like what you said there. I appreciate your thoughts on the matter because
no, it's exciting. It's exciting, and I love all the companies play a role, right? The one thing that I think people forget is how much time infrastructure build out takes, right? Even though it's just software, it's bits and bytes, it's complex, and it takes a lot of smart people every single day going to work in a lot of different spaces in the industry, right? And I think in 2017, you saw the excitement and essentially what we just talked about, right? And the market got ahead of itself, right? And the fact that people can invest in this space with just buying cryptocurrencies, quickly that spiraled out of control, and it was absolutely a massive bubble. But similar to how the internet bubble burst in 2000, right? People were saying the internet's dead. No investors were putting money into internet companies. VC capital dried up. If you said you were starting an company in early 2000s, good luck. And now look 20 years later, how much the internet has absolutely revolutionized the world. Who knows if blockchain and cryptocurrencies will have that same effect? A lot of people argue they will, a lot argue they won't. But you can draw similarities where anytime a new exciting technology comes onto the market, and especially the retail market, is always going to get way ahead of, and they're going to hop on this hype train. They're going to get way ahead of the infrastructure build out. But quietly in the background, the infrastructure is still being built out, right? These companies that offer this new age banking, these tax services, insurance, right? All these different players, these exchanges, they're still working hard. And I think, we'll see a lot still come from this space.
That is inspiring. Well, David, this has been a really good talk so far. I appreciate you coming on the show. Where can people go to use your service this year and learn more? Yeah.
So the easiest place for them to go is just to jump on our website at CryptoTrader.Tax. We have a full team of live customer support agents. So if you have any questions about anything you heard, just leave us a live chat and we'll get back to you right away. And then just feel free to reach out to me. I'm on Twitter at David Kemmerer.
All right. Well, David, thank you so much for your time. This has been a real pleasure.
Yeah, no, thanks for having me on, Ethan. I enjoyed chatting and getting deep into where I see cryptocurrency going.
Cool, man. Well, I'll talk to you later.
Take care.
My guest today was David Kemmerer, the CEO and co-founder of CryptoTrader.Tax. David's one of the most prominent thought leaders on the cryptocurrency taxation vertical. And I think, as you can tell, he's very knowledgeable in this space. Thanks to everybody for listening to this podcast. Thank you to everyone out there who's been sharing the episodes around, been getting some great responses, and I really appreciate everybody taking the time to get engaged and do more than just listen. Listening is important. I mean, obviously, thank you for listening. The show's really been growing, and I feel like we've been getting more and more momentum, bringing more and more people into this space. So it's really awesome to hear companies like David's who are actually implementing solutions. So as usual, please give us a kind rating, or if you'd be super kind, give us a good review on Apple Podcasts, Stitcher, wherever you get this episode. It really does help more people find out about the show. Share it with someone who you think might enjoy it, or interact with us on social media. We've got Facebook, we've got Twitter, @blockchain_show. We're on minds.com, the Blockchain Show. My channel is @KinderConnect. You can email me, info@theblockchainshow.com. If you know anybody who's an expert in this space, who's very knowledgeable, or just enthusiastic about blockchain and cryptocurrencies, I appreciate all you taking the time to listen to this episode. And if you've made it this far, I really appreciate you. And we will see you next week.